Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Centerspace, and let me tell you, the numbers might make you want to rent an apartment and hide from your own finances. Just kidding, kind of might. Before we get started, if you are into getting real insights from company reports, make sure you subscribe and join our Discord community linked in the description below. So what's this report about? It's an 8K filing which companies use to announce major events. This one, dated May 29, 2025, has a few interesting updates and we are going to break them down. First up, Centerspace, which is the company, issued a press release about its property portfolio on June 10, 2020. You can find these as exhibits in the filing. Now, a quick note. The information in those exhibits isn't officially filed in the same way as the rest of the report. That means Centerspace isn't necessarily on the hook for everything in those documents in the same way they are for the main filing. Think of it as extra info they are sharing, but with a little legal distance. Next, let's talk about money. Centerspace had a credit agreement through its operating partnership, with Bank of Montreal acting as the administrative agent. This agreement, called the facility, originally allowed them to borrow up to $250 million, with an option to increase it to $400 million. On May 29, 2025, they decided to use that option and increase their borrowing capacity by $150 million. So now they can borrow up to a total of $400 million. That's a big jump. If you want to dig deeper, you can find the press release and investor presentation as exhibits 99.1 and 99.2. The report was signed by Ann Olson, President and Chief Executive Officer, on June 20, 2025. Now, let's put this all together. Centerspace announced some portfolio activity through press release and investor presentation. More importantly, they significantly increased their borrowing power. Why is this important? Well, companies usually borrow more money when they see opportunities for growth or need funds for other investments. This could mean they are planning to buy more properties, develop new projects, or refinance existing debt. Looking at this filing, Centerspace seems to be positioning itself for expansion. The increased borrowing capacity gives them flexibility to act on opportunities as they arise. However, it also means they are taking on more debt, which comes with its own set of risks. One thing to keep in mind is that Centerspace operates in the real estate sector, which can be sensitive to economic conditions. If the economy slows down or interest rates rise, it could become more difficult for them to manage their debt or find profitable investment opportunities. So what does all this mean? Centerspace is making moves to grow, but they are also increasing their financial leverage. It's a balancing act between risk and reward. Investors will want to keep an eye on how they deploy this additional capital and how it impacts their bottom line. What are your thoughts on Centerspace's strategy? Do you think this increased borrowing capacity is a smart move, or are they taking on too much risk? Share your opinions in the comments below. If you found this analysis helpful, please hit the like button and subscribe for more deep dives into corporate filings. Don't forget to join our Discord community linked in the description, and thanks for watching. See you next time.